Right, so the industry giving the FM's budget a big thumbs up. How will the budget affect your pocket? Headlines today's Preeti Chaudhary brings you the tax classroom with Divya Baveja, who is a tax expert with Deloitte.
So every time when it's union budget and financial terminology just goes over your head and all that sticks is disposable income, well, then you're here at the right place. You're at the Headlines Today Tax Classroom, where we'll break it down for you, where we will tell you exactly how to make your money count to the maximum and save the maximum, and also how you can have the maximum amount of disposable income in your hand. I have with me in our tax classroom Divya Baveja. He's our tax expert, and with the latest today, there have been no change in tax slabs. Now, with that, but a marginal rise in exemptions, right. And with all of that, now what does it mean for a salaried class person out there for you? Does it mean, do you end up saving anything at all? Or does that saving actually gets offset by this increase in service charge? So I'm going to leave it to Mr. Baveja there. Mr. Baveja, first up, before you actually break it down for us on whether or not a person like me, a person out there who makes a standard salary will be able to save anything at all, the biggest takeaway for the salaried class?
See, the biggest takeaway for a salaried class is that when we look at whatever changes have been proposed in the budget,
right,
in effect, the saving is only of 19,600 rupees, which is marginal, which is actually nothing. If I look at it with the increase in the service tax,
it will get offset.
It would get offset.
Can you explain it to us, please? So we'll quickly break it down for our viewers right there. For those of you who are still struggling, you know, to comprehend this latest, even though there is no change in tax structure, but there has been a change in, like we just pointed out, in terms of transport and all of that. So how will it impact? I'll leave it to Mr. Baveja. Go ahead, sir.
So before I get into that, let me give a quick comparison, a snapshot of old versus new.
Yes.
So when I look at the old law, there was a basic exemption limit which was of 2,50,000 rupees.
So we are going with 2,50,000 rupees as a basic exemption limit, yes.
In the current law also, it remains the same.
Yes, so unchanged. Tax slabs have been unchanged, yes.
Then we go into the limit of 80C,
right,
which was earlier 1,50,000 rupees.
Yes.
In the current budget also
remains the same.
1,50,000. Though,
what is ATC for our viewers who are uninitiated?
Is investment made in specified avenues. It could be towards insurance premium,
yes,
towards provident fund, towards public provident funds,
and it remains the same.
It remains the same,
which is 1,50,000.
Now, one thing I want to bring to everyone's attention here is that the Finance Minister talked about an additional 50,000 in a new pension scheme. But if we look at the frame of the law, the overall cap of 1,50,000 remains the same. Earlier, the overall cap was also 1,50,000, but the new pension scheme, you could invest 1,00,000. Now you can invest entire 1,50,000, but the cap still remains
the same, 1,50,000. So it's the same there.
Then we go into 80D.
And that's where the change happens.
That's where the change has happened.
Okay.
So earlier, there was a limit which was fixed for individuals for up to 15,000 rupees. That has gone up to...
It's increased by 10,000. What all comprises of ATD?
ATD is a medical insurance premium for self, for family, and for parents.
Okay.
So the limit has gone up from 15 to
25,000. Yes.
Then there is an element for called transport allowance,
which is again gone up.
Yes, which was earlier 9,600 rupees.
Yes.
It has been doubled to 19,200.
So that's another jump, yes.
So this is a jump which is available only to salaried class.
Only to the salaried class, yes. So all of you out there who fill up your forms every time. So this is for the people who sit up and fill up their forms and claim that 9,600. Now that is doubled to 19,200.
So if I were to total this up, this would come to the magical number of 4,44,200, which
that's the
Finance
new
Minister talked about.
Okay.
And so if I look at the total of this, it comes to 4,24,000.
Okay, so there has been an increase of
19,600 rupees.
So yeah, 19,600 rupees is what a salaried person would be able to save with the new budget, even though the tax slabs remain the same. But where's the catch, Mr. Baveja? Because the catch seems that this figure could in fact be offset with the service charge.
Now my service tax, which was earlier 12.36%, has now gone up to 14.42%. Now service tax is, as everyone knows, an indirect tax levy.
Yes.
So it will impact whatever spendings you do. Some of those will get impacted by the service tax. So in effect, this 2.06% increase is possible that this 19,600 gets offset
by that indirect service charge, which is increased by 2.6%. So net 2.06%.
So net, there may not be any substantial saving in the hands of a salaried taxpayer or individual.
Well, that is disappointing. So for the salary class, nothing quite changes. With that little piddly amount that you ended up saving, you're probably giving it back to the government in an indirect tax called the service tax. So all in all, nothing changes for the salary class. Well, that is the lesson learned in the Headlines Today tax room there, tax room class, the tax classroom there. Well, we thank Divya Baveja for joining us and with camera person Ankur Arora, Preeti Chaudhary for Headlines Today.